In the past few months, over 30 million coins have been launched. With so many options, which one do you invest in? My name is Mitchell Wireman and I discovered crypto in 2017. I've been in this market for almost 7 years now, and for the past few years I've been living entirely from the income from my investment portfolio. They say it takes 10,000 hours to master a particular subject. Well, I can say that I've definitely put in more than 10,000 hours. I've made quite some mistakes along the way, mistakes that could have been avoided, because in the beginning I had no clue what I was doing. I was simply chasing shiny objects that would promise 10x, 100x, 1000x returns. I was nothing more than a gambler in the crypto casino. And after analyzing many of my mistakes, looking and analyzing, researching how some of the most successful investors in the space approach investing in a different way, I started to piece together my own investing framework and principles, which helped me to go from a gambler to a real investor that is able to grow his wealth consistently and predictably with as little risk as possible. In this video, I'm going to share the mental framework and some of the investing principles that will help you to avoid costly mistakes and make sure that you start making good money instead of losing money in the crypto market. So with that being said, I need to make the regular disclaimer over here. I'm not a financial advisor. Everything in this video is just for educational purposes only, and before making any investment, you should always do your own research and or consult with a professional financial advisor. And if you like to see more videos like this, where I give valuable breakdowns and I show you how I make money in the crypto market so that you can take important insights away from that and implement it in your investing journey as well, then make sure to like this video and to subscribe to my channel. Let's get started. There are so many financial gurus on social media that claim to be rich with rented Lamborghinis and faked screenshots. Who can you really believe? Well, when I embarked on this journey, I started to search for people that really have the track record and the results that I want to have. I started to search for the best investors in the space with verifiable track records and results. And regardless of what industry you're going to be investing in, whether it's crypto, stocks, or real estate, the same investing principles hold true regardless of what market you're going to invest in. We all need to start this journey by studying the greats. And one of the greats that everyone should study is, of course, Warren Buffett. Warren Buffett is one of the wealthiest individuals in the world. He has a net worth of over $100 billion, and he amassed this wealth through investing. So apparently there's something that he really does well. So when I heard about Warren Buffett, when he popped up on my radar, I made sure to read every book on Warren Buffett, to listen to every YouTube video, and to make sure that I truly get into his mind and understand what he did differently. And I started to discover a reoccurring pattern. Warren Buffett approached investing in a completely different way than I was doing at that time. See, when I was getting into crypto, I was only searching for 10x, 100x, 1000x return potentials. And I had to go into really risky projects to maybe get those returns, but most of the times I would just lose all of my money. You see, Warren Buffett does things completely different. He's known for his 2 rules for investing. Here they are, and if I were you, I would write them down. Make sure that you also stick to these 2 rules. So Warren Buffett's rule number 1 for investing is rule number 1, don't lose money. Rule number 2 is never forget rule number 1. You see, whenever Warren Buffett goes into an investment, he first considers all of the potential risks, and the returns are secondary. You see, when I got into a project, and this is probably what most people did or are still doing, is they first think about how big are the returns that I can get, like 10x, 100x, and they completely ignore the potential risks of the project. They're basically in a casino. If you really want to succeed in the crypto market and you want to make good money, then you need to learn how to consider the risks up front. When I learned how to more carefully analyze the risks up front and to more diligently do my research, my results also drastically improved. If you make the parallel again with gambling, it makes total sense. You see, you might be lucky to hit the jackpot on your first try, but if you lose everything again on your next few bets, or even worse, you put in even more money and go negative, you're much better off not doing it at all. So mindset shift number 1. to learn how to consider the risks up front and to focus on not losing money. So what are some things that you should look out for in order to minimize your risks? Well, the first thing that you should look for is a proven track record. You see, there are so many projects out there and anyone can have an idea, but what you want to look for is solid proof and evidence that a team or a project is actually going to deliver what they are promising. Most investors look for the next shiny object or altcoin that has just been launched. And in such a scenario, there isn't really a track record. You don't know if they're actually going to deliver what they have promised. And in many cases, many of those projects, the far majority, are projects that have been designed with one goal in mind. That is to rob rookie investors from their hard-earned money. We call these rug pulls or scams. So if you're just chasing shiny objects and altcoins that have just been launched, then there's a very big probability that you're going to lose money investing in these projects. And I used to do that too, and I was also losing a lot of money when I was doing this. And I don't even call this investing, I just call it gambling. Well, I don't really invest in projects anymore from the get-go. I first allow them some time and I see if they're actually delivering on what they're promising and if they're really building a solid project and if they're really building a solid community. And only then I will consider investing in the project or not. And this has helped me to gain a lot more control over the risks that I'm taking. And as a result, I've invested in a lot more winners than losers. And this has helped me to build my wealth over time. The second thing that I'm looking for is signs of growing adoption. So for example, you want to look at the number of wallets or the number of transactions happening on a blockchain or the number of decentralized applications that are being built on top of a blockchain or the number of users or whether there are any significant partnerships which could help accelerate the adoption of the project. Most people tend to forget that crypto projects are simply businesses and any business needs to make a profit in order to sustain itself. So if you look at blockchains like Solana, Ethereum, Polygon, these projects, they earn fees when people transact on these blockchains. Now, other crypto projects, maybe they're not blockchains, but maybe they're dApps or other types of projects, they all have a particular business model and you want to look for signs of increased adoption. So in the case of a new blockchain, you want to see if more and more people are transacting on the blockchain. Well, that means that if the number of transactions keeps increasing, the number of fees that the project is collecting also keeps on increasing, and this puts them in a really great position for the long term. An analysis like this will help you to get a better understanding of the long-term potential of a project. Contrary to what most people believe, wealth is not built overnight. It takes long-term, it takes persistence, and a long-term perspective. And this brings me to the third thing that I'm looking for, which is network effects. So what is a network effect? Well, that refers to the phenomena that something is becoming increasingly valuable the more users are on it. I'm pretty sure you're familiar with Facebook. Nowadays it's called Meta. If you think about social media, is a social network valuable if only 3 people are on it? The answer is no. But the more people are on the social network, the more valuable it becomes. And nowadays social media has become an integral part of most people's social lives. For example, want to know what your friends are up to? Simply open up Instagram and check out their stories. Want to know what you're going to have for dinner? Open WhatsApp and send a message to your mom. And finally, want to know how your uncle is doing? Open Facebook and check out his feed. Crypto projects also have network effects. For example, if you look at Bitcoin, is Bitcoin a good medium of exchange when only 2 people have Bitcoin wallets? The answer is no. But the more people have Bitcoin wallets, the more interesting it becomes as a medium of exchange, because everyone has a Bitcoin wallet, then it's becoming easier to transact in Bitcoin. Now we see that El Salvador has recently adopted Bitcoin as a legal tender, meaning that you can now transact in Bitcoin for normal everyday transactions, like for example your groceries. So use cases like that make Bitcoin only more valuable because you have more stuff that you can do with your Bitcoin. The more people have Bitcoin wallets, the more valuable Bitcoin becomes as a project. Ideally, you want to look for projects that have clear network effects. This brings me to the fourth thing that I'm looking for whenever I'm analyzing a project, which is a team. Who is the team behind a project? What I normally do is whenever I see a project, I look up the team members on LinkedIn or I Google their names and I try to search for proof of their track record that they can actually deliver what they're promising in these projects. So if someone is launching an AI project, like do they have PhDs or actual experts in their team that are proficient in artificial intelligence, or are they just really great marketeers that are putting the right buzzwords on a page to lure rookie investors in and take their hard-earned money away from them? So you really want to look if it really makes sense that these team members are actually going to be able to deliver. Many crypto projects are launched with anonymous founders. For me, that is a total red flag. The probability is very high that when you are investing in a crypto project with anonymous founders, that you're basically investing in a scam or a rug pull. And whenever the founders abandon the project, you have no one to hold accountable for. Now, another important thing that you need to do is you need to understand the statistics. 95% of all altcoins will not survive the upcoming bear market. And why is that? In the crypto market, there is limited attention, limited capital, and limited developers. And all of the crypto projects are competing for the same attention, capital, and developers. A project might be really hyped up and in a really great position today, but in a few months from now, the market might have a new favorite again. And that's why I personally don't really chase the hype. You need to learn how to position yourself in projects that have a long-term potential. A really great example for me is Chainlink. Chainlink is an essential component of the current blockchain and Web3 revolution that we're currently seeing. So what is Chainlink doing? Well, basically it takes information from outside of the blockchain, for example, financial information, temperature, or other data from sensors, and it connects it to the blockchain. As a result, it plays a very important component in the whole blockchain ecosystem. It has a very strong utility, it has a lot of adoption, and as a result, I believe it will be around for many more years. Another important mindset shift that I'm always emphasizing is that you should always have a game plan for every investment. You see, if you don't have a game plan for your investment, then you will probably base your decisions based on your emotions, and probably your emotions of fear and greed. This will result in you selling when you should be buying and buying when you should be selling. Here's another quote from a billionaire investor, George Soros. He says, if investing is entertaining, if you're having fun, then you're probably not making good money. Good investing is boring. What does he mean? Well, most people approach investing like a casino. They get a dose of adrenaline and dopamine when they throw their money at random investments hoping to get rich overnight. But most likely they will lose all of it. You see, real investors or successful investors, they make a game plan for all of their investments and they simply stick to their game plan. It's almost boring and mechanical. Documenting your investing game plan is crucial, and you can do this simply with a Google Doc. So when you're making your entry plan, you should write down in a Google Doc or in a document or maybe a physical notebook, what are you going to buy? When are you going to buy? How much are you going to buy? And why are you going to buy this particular crypto project? You need to have clear answers for each of these questions. After you have defined your entry plan, you should create your exit plan, because an investing game plan has two components, your entry and your exit. So for your exit plan, you're going to write down when are you going to sell? How much are you going to sell? Why are you going to sell these amounts at these particular times? For example, when I apply this to Bitcoin, please bear in mind this is not my real entry or exit plan. I'm just giving you some hypothetical examples. So my entry plan could be, I'm going to invest in Bitcoin. I'm going to invest $100 at the start of every month. I'm going to do this consistently every single month. Why am I going to do this? Because I believe in the long-term potential of Bitcoin. Bitcoin has a limited supply of 21 million Bitcoin, and while the supply is very limited, we see an increased adoption. We see large wealth managers like BlackRock buying Bitcoin, countries are buying Bitcoin, pension funds are buying Bitcoin, like so many individuals and organizations and countries are now getting involved in this, and over time I believe that this asset will really increase in value. So that is my entry plan. Then let's talk about my exit plan. Well, my exit plan is that this bull market cycle of all of the Bitcoin that I've purchased, I am willing to sell 50%. So I'm going to take profit on 50% of my Bitcoin, and the other 50% I'm going to keep in Bitcoin, and I'm going to hold it for the next cycle for the longer term. When am I going to start taking profit? Well, I'm going to start taking profit when Bitcoin goes above 100K. I personally believe that Bitcoin could go to 200K per Bitcoin. So for every 10K that Bitcoin is increasing, I'm going to take profit and I'm going to sell 10% of the Bitcoin that I'm going to sell. And by taking this average of these price points, I'm going to slowly dollar cost average out of the market. And that is my exit plan. The market is an emotional roller coaster. Huge price swings are going to make you doubt your own decisions. This will help you to make the best possible decisions long term. Which brings me to the final mindset shift that you need to make if you want to become successful as a crypto investor. There is a famous speech by Jim Rohn, the mentor of Tony Robbins. It's called The 4 Seasons of Life and Business. And so Jim Rohn explains that there are 4 seasons. You have, of course, winter, spring, summer, and autumn. If a farmer adjusts his behavior accordingly to these seasons, then he will have a big harvest. And during harvest season, you're going to take the fruits of your labor, you're going to sell your crops, and you're going to earn the money that you've worked for your whole year. And that is how the cycle of the 4 seasons work for a farmer. Very interestingly, it works the same for investing in crypto. It takes time and you need to go through the cycle in order to get the biggest possible harvest. All assets move in cycles, regardless if it's stocks, real estate, watches, or crypto. But there's something very specific about the crypto market cycle, and that is that it moves in 4-year cycles. And within those 4 years, we see 4 very specific phases of the market cycle. We've got the bear market, which is a period of steady decline of the price. Then we see the pre-bull, which is close to the bottom of the market. That's where basically the market is processing all of the pain of the bear market, but slowly it's becoming a little bit more positive again. Then we have the first phase of the bull market. That's where we see the first increase in the price of Bitcoin. And then we have the second phase of the bull market, where price of Bitcoin really starts to shoot up exponentially, and the price of crypto in general, because when Bitcoin goes up, all other crypto projects go up. How do you adjust your behavior during these phases? Well, take inventory, you gain more skills, and you make a game plan for the next season. This is where you need to be patient, you need to stick to proven cybersecurity protocols. I've made a video a while ago about my system to protect myself against hackers and scammers, because yeah, you can make good money, but if you lose it all to hackers and scammers, then what's the point of taking all of that risk? That's particularly important when your wealth is starting to grow. Just having money is not the end goal. It's what you do with that money that gives it true purpose. So maybe you want to buy a dream house or a dream car, or maybe you want to treat your family to something. It's all up to you what you're going to do with that money, but it's important to not only make money, but also celebrate that you've actually gone through this whole cycle and that you have gained a lot out of it. So if you want to become a pro crypto investor, you need to learn how to do your own research. You need to have a game plan for all of your investments. You need to be patient, and most importantly, you need to understand how to ride the market cycles and how to adjust your behavior in each of the phases of the market cycle. So if you found this video useful and you gained good insights out of it, then make sure to hit the like button and to subscribe to my channel, and I'll see you guys in the next one. Peace out.